welcome back to the podcast. So today we are talking about what's going on in the market in the Reno Sparks area. It's our September 2025 market update. We're joined here with Neetha.
Hey everyone.
From Hope Properties. She's one of the agents we work with quite a bit over here at our brokerage. But the thing that we want to talk about today at the end of the market report is directly talk to people who are in the golden handcuffs, we like to refer to, which means you are one of the 80% in Washoe County that has a mortgage less than 4%.
4%, so low mortgage rate.
And you can't really give it up because it's really affordable. But I find yourself on all the real estate apps looking at houses that are gorgeous, next to better schools, the upgrade house, the dream house. So today, we're going to give you a step-by-step way to leverage that house with the low mortgage and get in your dream house. So that's what's going on at the end. So you want to stay around to the end. So I'm going to have you kick off the numbers. So real quick, we talk about this every time. These are always a month behind. So these are August numbers. And it's Reno Sparks, basically Washoe County. And then we're looking at single-family homes, not condos or anything like that. So kick it off, and let's talk about.
Yep. So we're talking about giving you market update for September 2025. So we're going to start with the median sales price, showing $589,975, which is a little down this month. So month over month, it's down, and from compared to last year, August, it's down 3.3%.
Okay. So, but in reality, it's still high, right?
Reality, it's still high. I mean, it's nice to see the arrows down a little bit. You feel like, okay, the numbers are coming down, but not really. I mean, 589,975. So
yeah, because I believe
590.
We were at the height 615, 620. So I mean, we're down 5%, but you know, with all the things going on, 6% interest rates, tariffs, all the craziness going on in the world, our market's still pretty strong here. That's the bottom line.
Well, yeah, Reno market is doing really strong.
Yeah.
Even though we're seeing a tad bit slow down, it feels like the numbers are coming down, but honestly not.
Yeah, very minimal. But it is the first time in years and years that I've seen consecutive months where we're down year over year. So we're down since last year. If you bought a house last year, theoretically, you're down 3.3%.
3.3%.
Last month was 4%. So there is a trend in the median home price down.
Yeah.
So keep that in mind. We get a lot of people who buy a house like 4 or 5 years ago. You could buy a house 1 year and 2 years later sell it for a $200,000 profit.
Yeah, that's not happening anymore.
So those days are over.
Actually, if you think about it, it's a long time ago now. Like we still talk about it, but honestly, we're 2025.
Right.
That happened back 2020, so like, it's a long time ago. I think we should not talk about that anymore.
So just keep that in mind that real estate has and always will be a long-term investment.
A long-term investment.
I mean, occasionally, just like the stock market, you'll get those bumps where you'll make 40%, 20% a year, but over the long term is where you make money. So if you're thinking you can get in this year and sell for $200,000 more in a year and a half, you got to be careful because interest rates start making an impact, and there's a lot of things going on. So, all right, so let's talk about closed sales.
400 closed sales, so that's down 6.5% from last month.
July,
For July, but then up 1.5% from last year.
Okay, so we're hovering around the 400 mark for August. Now, keep in mind that our real estate market here is seasonal. So naturally, I expect next month that there'll be less houses sold just because August is the time people get locked in and start school and start. I saw your video. Someone was looking at Christmas stuff yesterday.
Oh gosh, please don't do that. Costco had pumpkins and Dillard's had Christmas trees, and I'm like, no, it's like yesterday was the first day of fall.
Yeah.
So let's enjoy September before we get pumpkins and Christmas
It's been beautiful out. This is my favorite time of year. It's cool out in the mornings and it cools your house off. So median days of contract. So what we're looking at is for the median home, you list it. And it goes on the market, and you will get an offer within 29 days. Now, keep in mind, it's usually another 30 to 35 to close.
Yes.
So if you put your house on the market, you'll probably close in 60 to 75 days if it's priced appropriately.
Correct, Ken. So, I mean, 29 days seems like actually really low right now. It's kind of a weird market, right? I mean, I have two homes where, like, one I had to go through multiple offers to get it on day one, right, on the buyer side.
Yep.
On the seller side, the home that I have listed for $399, like, just went into the contract like right away. But the homes that are like $950 and above, they're all been sitting like for more
Price
than 60
matters.
days.
So it's getting expensive with interest rates.
Yep,
sure.
yep. So it's gonna be different based on like the different price range where the like a lot of factors. But again, 29 days seems a little bit low for me. Just seeing like what I see. But
Okay, so we're gonna skip this price to proceed because I don't like that
so
one.
median sold.
Yeah, median.
So median sold. This is per square feet is 321.
Okay, how's that compared to? It's about the same, right?
It's about the same. I mean, the stats say it's a little bit, it's like negative 3.6% from last month and 0.5% down from last year. So it's not much, but 321 seems pretty fair.
And just keep in mind that's a good number to use when you're out there. If you're in the $500,000 to $600,000 range, make sure that you're not overpaying for a property.
Yeah.
It varies. If you're in Arrow Creek or Montreux, those prices per square foot we've seen them go up as high $600, $700, $800 a square foot. So
yeah, I've seen 750.
Yep. I'll do new listings. So new listings is about 475. It's
Good
down
number.
about 9%. So this is an indication that the market's slowing. It's down about 9% year over year and down 16%. So that shows two things: that the market is slowing, and we're going into that seasonal adjustment.
Yeah, I was just gonna say, like, we're going into
16%.
fall, so we're gonna see less listings.
Yeah, so not as much to choose from, but usually when you have someone listing now, they are listing for a reason. So
it's pretty motivated.
They're motivated. So keep that in mind. I always encourage our buyers to look about 5 to 10% higher than what their budget is, because especially in this time of year, just because people are willing to negotiate and sell. Still, in my mind, sellers are still too high. And when it right comes down to it, if they have to sell, they will come down. So, talk about active inventory.
So 1,282 again.
Big number.
Yeah, big number. So down from last month, 4.4%, but up from last year, 15.4%. So, which is good.
So, unless you're a seller. If you're a buyer, this is great news. More houses to choose from. But 1,200, almost 1,300 homes available. We haven't seen that kind of inventory in years. And then we skip down here to the month supply of inventory. Just keep in mind that month supply of inventory is a balanced market between 4 and 6 months. And we haven't been in a balanced market 10, 15 years. It's been a while. It's been a kind of a crazy time. So just keep that in mind. Month supply of inventory is just simply is 3.2. So all that means is that if we don't get any new listings coming in, and let's just say that no one lists their house, and based on 400 closed sales, we're going to run out of inventory in 3.2 months. So.
Yeah, in 3 months.
So what's the summary of the market in your mind? Put you right on the spot.
Gosh, I don't want to look at the numbers and give you the summary from like what I'm doing.
Yeah, what are you experiencing?
Overall, it does feel like it's a weird market. Overall, it's a weird market. The sellers are not winning. The buyers definitely have more power still. But buyers are not saying yes right away.
Yeah.
They're taking their own sweet time. They love it, they want to do it, but there's a hesitation there.
Picky. So what I see in our business is buyers are a lot more picky. 5 years ago, just lucky to get in the house.
Yes.
I don't care about the backyard or the flooring, but now it's like, I don't like the flooring or the layout, or there's something that's holding them up. And
I even had like buyers coming to my listings and there's like carpet. I'm like, we'll give you carpet credit. Like, come on.
And they're like, no.
No.
Right?
So that's what I'm seeing, but I mean, transactions are still happening. I mean, real estate always happens. It's not like we have time now. No, we actually are working more.
Right.
Because the listings are sitting on the markets. We have
a
to
lot
market more, we
Earn your
have to
money.
do more open houses. So It's actually more busy right now than any other time because transactions used to go like this fast. I'm showing more homes to the buyers, so 2-3 times more the work for the
Right.
same transaction. So
Yep.
that's what I'm seeing right
More or
now.
less, yep.
Yep.
So it's an interesting market too, because it seems I have several people in the 1.5 to 2 million.
Mhm.
Those seem to go pretty quick, especially if it's in a nice neighborhood with nice finishes.
So for me, under 650 flying, $1 million for my listings, they're staying.
Sitting,
So
So prices are up, and you can kind of tell by the number of open houses, the active inventory.
and again, prices are not coming down in the sense that people who are actually selling right now are for especially my clients that are selling right now are people who just bought homes like back in like 21, 22,
Yes, so
23,
they're
and they have
fortunate
to like move somewhere, and now there's not enough equity from like last 2-3 years, so it's kind of like a tough situation for
So
them.
that's what I'm warning you about is
Yeah,
for years and years here, about 10 years,
Yeah.
you can get enough equity year to year, almost every 2 years to
Mm-hmm.
move and sell. But
Yeah,
with
so
negative equity now, be careful. It's a long-term play.
right, so
It always
that's what is happening right now. The sellers out there are like trying to get rid of the properties that they bought in the last 3 years, and that's a tough one. But
Yeah.
the topic that we are going to go into are going to be the good sellers, where they're like just sitting because their interest rates are locked at very low.
Yeah. So
It's going to be a good transition.
yeah, so if you have any questions, or if you have a family member who wants to know what's going on in the Reno Sparks market, send them this. Otherwise, what's your number just in case they want to contact you?
It's Neeta Gorla, 775-225-9754.
Okay, so now we're going to hop into a topic. I like to refer to it as golden handcuffs.
Golden handcuffs, I like that.
And I got inspiration from, I'm not going to say their names, but a lot of people know them, from one of our clients. They called us, said, hey Ken, I have a great house, 1,800 square feet, but I have a 3% mortgage. We've spotted this house that we like in South Reno. Can you help us buy it? And fortunately, you know, my experience, and there's no secret here, is I own a lot of rentals. So I know all about the property management. I manage my own rentals. I'm a tough negotiator. And then South Reno's our area. So I said, absolutely. So they went through the whole entire process. And this is inspiration from them on how they did it.
That's great.
And they are dynamite. I don't know if everyone's up for the task and what they did. They're very impressive individuals. They're hard workers. And it worked for them. But I kind of want to share a story where if you're in that situation, 80% of the market here in Washoe County has a mortgage less than 4%.
Correct.
Want to buy a dream house? This is one of the ways you're going to do it.
Yeah,
So
everybody was smart, everybody needs financed. So
that's right. And now rates are, and by the way, rates is a big misnomer. Rates are not down. I mean, they're down, but they've come back up.
So
Don't-
6.8 to 6.25. Today it's 6.35.
Yeah, so keep that in mind as everyone's calling and saying, oh, the Fed cut rates. It's not directly correlated. Keep that in mind. We get it. And I think the media does a horrible job of explaining the Fed's funds rate is something different. That's
It
what
actually-
banks lend to each other.
Yeah, before the Fed cut rates, the
It
interest
already
rates actually
went
went down, and then after they cut it, they went up a little.
So
So
keep that in mind. We're back into the 6.25 to 6.5. So all right. So golden handcuffs. So if you have a property you bought for 3 or 4, 5 years ago, less than 4%, tons of equity, and you're looking around online, Zillow, Redfin. This is how you can leverage that property and get into your home dream project. So the first thing you want to do is connect with your real estate team. Now, who are those? We always talk about those. Top realtors,
top realtors.
because they're going to help you obviously determine what's in
we'll-
the market.
Yeah, we'll build the case for you.
Yeah,
Right.
and then you want to talk to your accountant, CPA, because you want to know before you get into a rental what are the ramifications tax-wise. Because you don't want to go into that and not know that. Make sure a lot of people don't have an accountant. Once you have a rental, you need to have an accountant because there's a lot of hidden stuff that you don't obviously know. You got to have a financial advisor if you have one, talking about the money. And then you got to have the mortgage professional who's going to help you determine how much you can afford
Yes.
based on what your rentals bring in. And then we're all about asset protection. It's all about attorney. So those are your teammates. We always talk about that a lot on this channel. So
Yep.
get those. But let's hop into the first thing you need to do.
That's a
So-
good list.
The first thing you need to do, and then you can opine, and she actually helps people rent their homes. We'll talk about that in a second, is do some research on your existing home and figure out how much you can rent for, and not necessarily what you can rent it for, but cash flow. And cash flow is your income from your tenant minus all your expenses, mortgage, if you have insurance, all that, and what you're gonna net.
Yep.
Now that's the biggest thing. Now, what I don't recommend is if you're negative cash flow, then in my mind, you can't do it. You can't be negative cash flowing. And these, I'm not gonna go into the exact numbers, but the people who were successfully done this last month were cash flowing several thousands of dollars because they had a 2.5% mortgage on a low mortgage balance.
Yep.
So it really made sense when you can draw 2,000 to 3,000 or 1,500. But if you're only drawing like 200 a month, cash flow, it may not be the best strategy.
No, and then everything is expensive now too, Ken. So you definitely want to make sure those numbers are actually working
Yep.
in case of a repair or anything.
Yes,
It's
you
like-
gotta have money in the account,
Yep.
and you gotta set up all the things. So, I mean, if you wanna talk about this over lunch, I'm more willing to share what we know. But yes, you gotta have everything set up. You gotta have probably a property manager. And then the second thing is to make sure that, do you have what it takes to be a landlord? She's a landlord, I'm a landlord. It's not always great.
It's not always great, but it's the mindset, right? It's something that you want to do. You love real estate. It's one of the best wealth builders that there is. So are you willing to put in work? If you don't want to put in work, but you still want to be there, you just talk to an expert and we'll get you someone. Right?
And you can
We'll
do a
get
property
you-
manager. The other thing
Yep.
is that property managers, but they do take a percent every month.
Yes.
So the bad news is,
You have to factor that into
yes.
your cash flow numbers. So
So-
is it going to still cash flow after
Alright.
paying the property manager?
So let's just say it does cash flow. Let's say in our example, you're cash flowing 2,000 a month, not something outrageous.
Yep.
So this is great. That means every month your tenant comes in, they pay rent, you get $2,000. You can put that towards your mortgage, or it comes in. So that's the great thing about that.
Yep.
So if that's the case, then you go to step 2. So step 2 is, in my mind, you got to call in your real estate team, and I
Yep.
say that's your mortgage broker and your realtor.
Yep.
And once you have that, you talk to the mortgage broker, and they're going to help you, or mortgage consultant or professional, or whatever you want to call them,
Yep.
and figure out what you can afford. Now, they have several tricks. We can't specifically talk about that, but there are ways that you can include if you have a signed lease, and there's all these different ways to do it, where you can offset some of your debt to income every month by what's on.
On the lease,
On
yeah.
the
If
lease.
you're able to secure a lease, that's great. They can use that income. If you're
But you
not
need
able
to follow all the rules for that.
Yes,
Talk-
but if you're not able to secure the lease, sometimes they can still see what the market value is for rent, and
Yep.
they could use that. But I think that's only at like 75%.
Right.
But there's still a lot of ways around it. Like if you make up your mind to do it, like we have ways to help you with that planning.
So once you establish that, and then you get the number from the mortgage company, and then he has to decide, is it enough? Can I afford enough? Am I secure enough where I have enough buffer to get the dream home? So if that's the case, in these people's case, they did not go extravagant. They actually found, in their case, a step-up house. It wasn't like their ultimate dream house, but it was way bigger, better, bigger rooms, more yard. And they found one that was kind of a distressed property. And then, so it really worked for them. Now, if you're looking for a $2 million house, $3 million house,
Yeah,
it could be tough unless you're making the big bucks.
if you need to come up with a bigger down payment, then
Yeah, and then you can talk to your mortgage person to figure that out. But those are the now, if you get to the stage now where that makes sense, and you're like, all right, we found a house, we can afford, let's just say, $1 million property.
Yep.
Then the next step is to start looking at houses. Make your list. Now, some people do this and they're looking for a year or 2 years. I have several people that are in the pipeline from 3 or 4 years ago, and we're closing some of them. But start visiting, get with your real estate professional, based on what you can afford, based on what you can rent your house, and start looking around and seeing the houses that are out there, see if there are that meet your criteria.
That's the biggest mistake that buyers make is they don't do any of the steps and they just go online and start looking at the homes. They don't know, they don't have a plan, they can't build their case. They just want another house, but they don't know how, but they're always looking online and putting a heart on that house. But so honestly guys, please don't do that. Like talk to one of us first. Like that's
I know people do it. A lot of my clients are just looking, they just scroll. I mean, we all are guilty of it.
Like seriously, like that's all you do is like go online and look at homes. But I'm like, what are you doing? Like, why are you looking at homes? Like, take a step back. Take a step back and let's build your case and let's plan.
You gotta get with a real estate professional and build the foundation. Understand all of this criteria.
And then once you're with us, we are there like an accountability partner, like helping you with like every home, research it for you. If the numbers are working, what's a good time to buy?
Yep.
Like, once you get attached to us, then we will make it happen.
Right. And we have all the professionals that can help. We'll talk about that in a second. So don't feel overwhelmed if you don't have a CPA, an attorney, a mortgage person. That's why you're going to pay us. Ultimately, is we have all those professionals that do this for a living, and then we help build that team. So don't feel overwhelmed that you have to do that on your own. We're going to help you with that. So you get to the point now. There's a few keys in this that I realize helping these people is the first thing is they are do it themselves. So they found a house that they put the flooring in. They were able to find a good deal on carpet. They painted. They painted their own house.
Nice.
So
Very nice.
if you can find houses that have been sitting 90, 120, 150 days.
That just needs a little carpet or a little paint.
And a lot of sellers don't have the ability or don't want to paint it, put new flooring in. So we're looking at like cosmetic things that you can do on your own, or we can help you find vendors that do it for a reasonable price. Those are the typical houses that you want to find.
And right now,
there are some. There's a whole bunch in that 900, I would say 900 to 1.4 range. Now, not everyone can afford that, but I even go to 800 to 1.2. There's a lot of houses in the older neighborhood that needs work.
I'm actually getting one today.
Okay, so look out for that. We're going to do a video on that one. So that's one that you can look for. Now, if the house has been on the market for a while, have your realtor be a strong negotiator. These people, we got a lot of things covered. We got credits for repairs. We got rate buy down. We got most of their closing costs paid for. And then we were able to include some of their rent from their place that they're renting. So this all went into a big plan that worked. So they got everything they needed, and they spent a month. They painted the house. They put flooring in. They're having they're putting up some gutters. So there's a lot of stuff that is really paid off for them.
See, that's a motivated buyer right there, taking advantage of today's market.
Yeah. And right now, a lot of sellers, if their house has been on the market for more than 29 days, they're willing to negotiate. Now, you may have to pay like they're close to what they're asking, but you can typically get a lot of credits to help you offset a lot of your capital that you need to come up with to afford that property. So, that's basically it. Now, obviously, everyone has a special circumstance. Everyone has different amounts of money, different jobs. So, if you want to kind of just talk about your situation, that's how this gets going. Is talk to a realtor, preferably one of us or both of us. Go to lunch. Figure out your plan. Even if you're not planning to do it, just start thinking about it. I just went and had a consultation with a buyer who's thinking about it and start getting the ball rolling and all the things that they need to do. One of the people who did not end up wanting to do a rental because they just don't want to do it is we talked about, all right, we're going in the fall, more of these vendors are going to be available. Let's get your house fixed up because they're going to sell and buy. So get it, take advantage. There's always a plan that you should always be looking out on instead of just liking houses. That's not going to get you.
Looking at the house.
That's not going to get you forward to your path on what you want to do.
So basically, what we are saying is, if you feel like, okay, I have really low interest on my mortgage, I'm very comfortable with my payments, but you're doing this and scrolling and looking at homes, and you really want another house, just talk to us. We can make it happen for you.
Yeah, because like you said, sometimes it makes sense to sell.
Yeah.
Honestly, it's not always keep, but
Yeah.
I'm a big proponent. I'm going to warn you up front. We work in real estate, so we own rentals. I'm a big proponent of keeping rentals. There's a lot of tax advantages that you can take advantage of and lower your taxes if you're in a high tax bracket too, and keep that asset. In my mind, it's just my personal opinion, is a 4% mortgage is an asset. Please do not be paying that down. I know there's a lot of people I disagree with online. Dave Ramsey wants you to plow in all your money and have a paid off house, but if you have a 2% mortgage, I can go put.
I have a 1.99.
So you can go put that in a money market or a bond and make 4 or 5%. Maybe not a bond guaranteed, but there are money markets making 4%. So you'll be making 2%.
Yeah, so there's a lot of advantages. I mean, I recently have a new buyer who wants to buy an investment property. I mean, believe it or not, in this high interest rates, only because he wants to save money on taxes.
Yeah.
Their CPA told them, hey, by the end of the year, buy a house. So.
Yeah, and we can always look into what that looks like and help you. We buy rentals, so we know what you should be looking for and give you some advice on that. So.
Yeah, so don't be locked. You have questions.
Break those golden handcuffs.
Yes.
So.
I like that.
All right, so if you have any questions about this, or if you know someone that is in that particular area, low mortgage rates, wants to buy a dream house, give them our name or number, forward this video. How about 20,000 this time?
All right.
20,000 views?
20,000 views, guys.
So the channel's really growing, and also if you want, leave comments below. We have a newsletter we send out. We actually do a blog, so all this stuff goes out every week, and it's all helpful tips. And the last thing is we have all the people that you need, the vendors. So that's another reason why we use painters, deck cleaning, windows.
Yes.
The whole thing. So keep that in mind, is that you don't have to do all that on your own. We are here, and that's why we get paid. So, all right, guys, enjoy this fall weather. It's my favorite time of year.
Me too.
And we'll look forward to seeing you in the weeks to come. Take care. Have a good day.
Thank you.